Hey everyone, welcome back to Corporate Decoder. Today we're diving into LyondellBasell's latest quarterly report, and let me tell you, it's a bit like a roller coaster ride, some ups and downs and a few unexpected twists. Are they making smart moves or just rearranging deck chairs on the Titanic? Let's find out. In this video, we'll break down exactly how LyondellBasell performed over the first 3 months of 2025. The headline, it's a mixed bag. While net income looks positive, a closer look reveals some interesting challenges and strategic shifts happening beneath the surface. We'll focus on understanding the numbers and what they mean for the company's future. First up, let's talk about something they've swept under the rug in a line called income from discontinued operations, their refinery business. They actually made money on this, $154 million. Think of it like selling your old car. You're not in the car business anymore, but hey, you got some cash. Now, zooming into the core business, sales are down, a worrying sign. They made $7,677 million, lower than the $8,304 million made the prior year. That's like losing almost 1 in 10 customers year over year. What Warren Buffett likes to say here is that every dollar counts. Now, operating income, which is the profit they make before accounting tricks, is $1114 million. Now, this looks terrible compared to last year's $51 million. And then to see that there are problems in their investments, as can be seen by the line called income loss from equity investments. Down 20 investments, down $28 million. All of this means is that their management team has a lot of work to do. Speaking of cash, let's check where the money is at. They have $1,870 million. That's almost $1.5 billion down from the $3,388 million from the beginning of the year. Where did all that money go? Did the execs buy a yacht? Just kidding. Let's scroll down further. Turns out that they use most of the cash to make payments on dividends and buy back their own stock. Warren Buffett has a problem with this. Why give money to shareholders and decrease the business's safety net if you're not confident that you will grow? Let's check which product makes them the most money. Looks like polyethylene, polypropylene, and oxyfuels are their top sellers. If any of these products stop selling, LyondellBasell has major problems to deal with. Let's see from which countries they earn their money from. The USA is the place they print cash in, followed by Germany, China, and Mexico. Is this company financially stable? I would say it is, but nothing too impressive. It has $10,605 million of short-term debt. Now, I want to know their derivative portfolio. What are they hedging and what they are not? They list various categories, such as derivatives designated as hedges, commodities, foreign currency, interest rates. It looks like they are mostly using commodities and foreign currency as hedges and not interest rates. Why would you hedge commodities and foreign currency if you have a bad business? Probably to ensure you survive if you don't have the best business model. Currency if you have a bad business. Probably to ensure you survive if you don't have the best business model. The accountants keep mentioning these accumulated losses and other comprehensive losses. In English, it means that the accounting is getting too complicated. That's all. On that note, they keep buying back stock, $110 million. This decreases the amount of shares circulating and makes each share worth more. But why buy back stock if you have a cash deficit and your main business isn't doing so well? Let alone they're paying out money to shareholders through dividends as well. They have some concerns on cash, so they introduced a cash improvement plan. This includes saving in these 3 steps: defer spending, 2, reduce in working capital, 3, reduce fixed cost. Let's see how they execute on it. They keep a good amount of cash though. So for now, it's nothing too dangerous. They have $1,867 million. All right, those are the numbers. Now, what do I think? It's important to keep in mind that this is forward-looking information and their words. I caution you that these statements are not guarantees of future performance. Looking at LyondellBasell, they're kind of at a crossroads. On one hand, they're giant, diverse, and have a global network, so they're not going anywhere anytime soon. But their main business isn't growing year over year, and that means big problems if they're not the lowest cost provider or doing anything special. Their main business segment has big competitors. That leads to unstable margins and problems because they cannot raise pricing due to other cheaper suppliers. Their sales are going down and can be driven from 2 reasons: because prices decreased or volume decreased. Their strength lies in their scale and global reach, making them a key player in their industry. I do have some worries about them, including the amount of short-term debt. In the long term, this is not sustainable. Overall, this quarter shows the company at a crucial point. They need to innovate, adapt, and address the core issues to ensure long-term success, else they may not be doing the best. Thanks for watching. If you found this helpful, be sure to like and subscribe for more corporate deep dives. And remember, always do your own research.